Hello, everyone. A very warm welcome to our channel. And today we have a very special guest with us, Darshan. And Darshan will be sharing his insights as to how one can make a career in valuations. Okay. Hi, Darshan.
Hi, Veer. Thank you for your kind words. Probably it's too modest of you to say all of these things, but yeah, thanks.
Okay. Darshan, can you briefly touch upon, can you introduce yourself?
Hi. So basically, I'm a chartered accountant, graduated in 2016. So before chartered accountancy, I pursued my internship with a mid-tier firm named TP Oswald and Associates. I worked in multiple segments there: assurance, direct taxation, and international taxation. So I got to work in various fields, and post chartered accountancy, before joining a post qualification role, I completed my CS course, and once through all of these things, I took a break from academics and started working with PwC in the valuations profile. There, I used to look at domestic equity and business valuations for almost 2.5 years. Post that, I worked with a couple of startups and then joined Apollo Global Management, where I'm looking at in a similar role, which is in the valuations, but primarily of debt securities here, and that's about it.
Okay. Okay. Thanks, Darshan. So, Darshan, can you just tell us what exactly do you do on a day-to-day basis?
Okay. So let's break this question into two parts, because what I used to do at PwC is completely different from what I do at Apollo. Apollo is a giant debt fund, credit fund, and PE fund. So the work here is completely different. At PwC, it's like valuation of businesses, valuation of equities primarily, and also allied segments such as purchase price allocations, so valuation of intangible assets, or standalone valuations of certain real assets if required. There is a small component of work which flows in the form of startup valuations, and because the startup securities are not plain vanilla, and they have a lot of different hybrid components with a lot of clauses which are not quantifiable so easily, such as board rights, liquidation preferences, etc. So, got to touch upon a lot of such aspects at PwC. Talking about my day-to-day work, it's if I divide them in parts, it's like understanding the industry, then understanding the history of the subject company, then going about the research of what the future has for the industry and for the company, and thereafter looking at the valuation. Primarily, more or less, valuations are based on the inputs provided by the management usually, and in this case, we vet those inputs firmly, and thereafter do valuation. There are multiple methods, so we get to apply all of them. We check valuations using multiple methods, though we may finalize only using one. At Apollo, if I have to talk about my work at Apollo, yeah, so Apollo is first I'll give you a brief. People in India might not be aware. Apollo Global Management is a $450 billion fund. It has 100 billion of private equity assets, 50 billion of real estate assets, and almost 300 billion of debt assets. So it has got a lot of funding from multiple government and pension fund, government authorities and pension funds. It is based out of New York. Now, the debt portfolio is very strong, as I just mentioned the numbers, and I look at the private debt funds, private debt instruments. So here, the company has invested across segments, so it's sector agnostic, and most of the investments are valued by an external valuation firm, obviously because of assurance requirements, because Apollo is a listed entity. So the investments are valued quarterly by valuation firms. But as an internal, to keep a vigil on the valuation and to get a sense check, there is an internal private valuations team which looks at the entire valuation from a third person perspective. So effectively, what happens at Apollo is there is a team which does the investment, there's a team which does the monitoring of the investment, then there's the private valuations team, and then there are valuation firms such as Marsh. All the big fours are somewhere like in the audit capacity, so we don't outsource any of the valuations to the big fours. So we've got Alvarez and Marshall, William Lockheed, Murray Devine. These are all giants from the States. So yeah, there are 4 segments, and we work independently in the private valuation.
Okay. Okay. Wow, wow, very nice, very interesting profile, I must say, Darshan. So,
Yeah,
if you
definitely.
can you touch upon exactly what are the skills required for your profile, and especially the theoretical, as far as the theoretical knowledge is concerned, how different is it from the CA curriculum?
Quite interesting. Like there's a little bit of, if I have to say something about the CA course, it is not so much focused on finance as a profession. That is the reason when you look at like giant roles at good PE funds, they are almost focused on MBAs. India, especially outside India, the CFAs and good commerce graduates get an opportunity to work at these places. But in India, CA course doesn't focus so much. So if I were to say, like, the CA curriculum is limited in nature. It has narrow focus. Like if you look at accounting side of CA, from CPT to CA final, you get to go through the entire transition, and the accounting principles are there at all the three levels. Okay, there are accounting standards work at all the three levels. At the IPCC level, there are 200 marks papers for accounting. Like, but for taxation, it goes throughout. The syllabus only increases, never shrinks. But in finance, you don't see similar thing. Like, it's completely different at the IPC level and the CA level. So I may criticize the institute here for keeping the course curriculum quite regressive in nature, if I were to use that word. But so what I did, I'll tell you also. So the CA course has limited knowledge to give you, but what we do in real life is much more beyond what is taught. So let's say in direct taxation, for example, if I give you an example, you understand a provision, you understand various case laws around it, then you understand how people have defended or how actually they use the particular provision for their work. In finance, as per CA course, what happens is you understand a method, you get a simple problem around it, you do the calculation, you get a value. But in real life, that is not how things are done. That is a very small portion of your work. What happens is checking the inputs, understanding why this should happen. So valuation, in a sense, it is understanding the narrative, understanding the history, bridging the gap between the two, and giving it a value. But all those aspects are never covered under the CA course. So theoretically, you may know a lot of methods under the CA, you may study a lot of methods under the CA curriculum, and for that matter, CFA curriculum as well. Let me go to CFA after completing point. So you understand a lot of things about the methods, but not qualitative aspects, which are your day-to-day uh, requirement while you work in the segment. Now coming to the CFA course also, why CFA course I would not suggest like only from the theoretical point of view is because the CFA course, the exam pattern is it's very simple. Like there's a passing percentage almost 47 to 50 percentage, and it's MCQ driven, and right now it has become online now. So it's the test taking strategy methodology is little, like in my opinion, not is independent CFAs in India are not given that much credit. So and people who clear CFA exams may not necessarily have the right knowledge to actually go and do the work in valuations team. And this is not only from exam perspective, but I have also worked with independent CFA or BCom graduates or only MBAs during my stint at PwC. So the particular skill set that is required now to answer your question, you can understand methods on the job also. That's not no rocket science. It's like simple understanding. But there's a process in which you follow those inputs, putting put the inputs in the method. There's a specific approach in which you look at things. So there's certain set of I may not call them steps because it's very subjective in nature, valuation per se, but it requires a lot of analytical thinking, and that comes only with experience. So certain set of skill sets required is like understanding various businesses in the first place, like having a hang of how in general business done at a very macro level, and then going through particular industries to understand the nuances, and so you can understand the nitty-gritties and the intricacies, and post that, then understanding how to apply the methods.
Okay. Okay. Amazing, amazing, very nice. So, Darshan, can you So in your experience, a fresher, see a fresher, while you really mentioned that a lot of learning will happen on the job, but as far as a fresher is concerned, how do you mitigate or how do you bridge that gap, if at all it is possible? So, do you think courses like financial modeling, etc., are would would be helpful for a fresher who wants to make a career in valuation?
So I'll tell you my own example how I transitioned. So actually, I was waiting for the right opportunity, and for that reason, I started like almost 8 to 9 months after my peers had already started working. So there was one reason why I was pursuing other academic ambitions, but another reason is like I was waiting for the right opportunity. So I didn't do my articleship from a Big Four. So certain preferences and certain like they have preferences. Big Four, the HR has preferences. Now talking about how what a fresher can do and what I did. So what I used to do is I'll not be like looking for a right job which paid me the right amount. I used to read a lot about investment banking. I used to read about M&A. I used to read about valuations. I used to read the book of the god of valuations, Ashwat Damodar, who teaches at NYU. Like he's if you want to make a career in valuations, you have to go through his material on YouTube as well as his books. That's a must. So that is one. Two, you read a lot, and as I mentioned in the previous answer, you have to go through various industries, understanding businesses in general, the nitty gritties. So let me touch upon valuation specifically. What happens? Let's say Reliance, the oil and gas segment. I need to value the oil and gas segment. Okay, so what I'll have to do first, I'll have to understand how oil and gas, let's say exploration and refining works. Then I have to understand how Reliance caters to the customers, like what is the customers target customers. Then I have to understand how. So let's say Reliance operates primarily in India, but it exports as well. It imports a lot too. So how the macro environment will affect it. So and how the global and Indian oil and gas segment is doing. So after understanding all of these things, then I'll ask Reliance to give me the projections of the next few years. Let's say I'm using a discounted cash flow method. Uh, so once I get those projections, I look at those projections and understand what Reliance had done in the past. Then I'll try to bridge that gap, and then eventually see whether it can achieve the target numbers that mentioned the projections. I'll try to evaluate. I'll try to quantify the risk underlying the assumptions to and to value uncertainty is where a professional valuer comes into play. So this entire process requires a lot of analytical thinking, as I mentioned earlier. And to develop this, you need to read a lot. So basically, this is what you have to do. And once you get a call from, let's say, mid-tier firm or a top-tier firm for valuations, they'll ask you questions related to similar things. Like for a fresher, they ask you how different methods work, and they'll give you a sample industry. Okay, if you have to do for a manufacturing entity, how will you analyze it? What are the different ratios that you will look at? How will you evaluate the historical performance of the company? So yeah, that's about.
Okay, okay, got it. So, in a nutshell, you would really advise any potential candidates to read a lot and just getting to know about what is happening in the economy. And also, I think one very important tip I think which you mentioned was that you need to focus on how the business works, right? What happens is that during our articleship, we focus more on documentation, especially if you're coming from audit background, right? People focus on documentation, but one needs to get a hang of as to how exactly the business is working. So a very good tip. Thanks, Darshan. So moving on to the next
And
question.
I think I'll add one more point here. Anybody wants to make a career in not only in finance but in whatever field they have to read a business newspaper, because at the end of the day it is all about money. So I have been reading The Mint since years. People prefer Economic Times as well, but read the editorials, read the economy, read the startup space, and read markets, and then something of your choice. So this is a must. This has to be a part of your routine.
Right. Thanks, Darshan. Okay, so moving on to the next question, who are the typical employers for valuations practice apart from the big four?
So let's break this into like, valuation specifically. Uh, it's a very complex question. Let's say if you want to only focus on valuations, okay. So the top place where you can be is the big four, as you mentioned. Then there are certain like if you consider big five, then you will add Grant Thornton. Let's say there are certain tier two firms like there is BDO, okay. Then there is Haribakti. Then there's upcoming RBS. Then in Mumbai there is Sharp and Turner. Then there are various other CA firms which provide valuation as a service. Those are like Bansi Mehta. Then there are many like let's say in Delhi, and there'll be local firms which will provide that. So there's Dun and Bradstreet, which is again famously in the turmoil for Kingfisher. But yeah, so there are multiple firms in tier two, and then there are CA firms below the tier two firms which provide the valuation. Now, keeping this aside, there are global funds and Indian funds that, as I just mentioned about Apollo, there is an investment team, and then there is the financial modeling team, which makes the model for their investments, or they get the models from like based on their expectations. And then there is an investor monitoring team, and then there's a valuations team. Most of the funds have at least one or two valuation team member to converse and to liaise with the valuation firms with which they are to get the quarterly valuation done. So that is one important goal. And people eventually, usually this is what I've seen the trajectory of people. People want to go into valuations of finance or FTD, or there is investment banking. Eventually they want to go to a IB or a P or a VC fund. So if you want to make this transition, it's a very good place to start. Is like working with various funds. So that is the second place where you can go and work. Then there are a lot of international funds that may not have major investments in India, or that may not have major operations here, but they are, because of the amazing talent that we have, finance talent in India, they are opening up teams here, outsourcing there a lot of work, primarily with respect to valuation, which can be explored as well. And
So
then
you mean to say
fourth,
the back
there's
office, right?
I would not call it literally the back office, because you get to work directly with all the investment team members. But yeah, in sense, it is the back office, but work-wise, it is not.
Okay, got it.
Yeah, because there is Deloitte. Like I'll explain you the difference between back office. Like there is Deloitte UK, there's Deloitte Canada. Deloitte Canada or Deloitte UK has a client, let's say Wilmoit Inc. Okay, and Deloitte Canada gets work from Wilmoit, but Deloitte Canada has a separate agreement with Deloitte India. Deloitte India reports only to Deloitte Canada, so that is proper back outsourcing. But when the funds set up offices here, I am the person responsible to talk to the person directly in New York. I get to work with the investee company and then finalize the valuations.
Got it. Got it. Okay, amazing. So, Darshan, I think you briefly touched upon this, but what are the typical growth prospects for this profile? Like, what after this profile, if anyone wants to make a switch, let's say.
Sure. So I'll tell you, my first love is taxation and law, because I've spent most of my life before qualification. So I never thought I'll be making a career in finance and going for an MBA. So I think finance was like an option where I had to try and understand how it is. If not, then I had to fall back with taxation right for where I do manage. After working here, I realized that thank God it worked. It worked out well for me. Finance in general and the prospects from finance are immense. Actually, I may be going for an MBA right now, so I have different sets of opportunity line. But what I have seen of core finance professionals and the trajectory of their growth is phenomenal. So I think people who are interested in finance should definitely go ahead. People who are not interested in finance and have never explored should also try finance before settling at a certain place. And if I have to tell you about what all prospects you have, so valuations, financial due diligence, business restructuring services, or back office work, or equity research work are all the starting points of core finance roles in the future. So where actually can you end up from valuations? So there's somebody who went from valuations and FDD to real estate investment banking. There is somebody who went into a real estate capital equity fund, private equity fund. There's somebody who went into a PE. There is somebody who went into a corporate finance, which is the investment banking in-house team at a giant company in India. There is somebody who went into X Capital, which is an investment banking team. And yes, there are others who went into who pursued entrepreneurship. So these are the diverse set of opportunities you have, and these are all people whom I know. So it's the world is open for you once you pursue career in finance. And one important thing that I feel finance gives you is the analytical mindset that is required, and it develops an approach towards looking at things. So while doing assurance, while doing taxation or legal work, I used to always feel like I'm having my blinders, or like I have to look at certain things in a regulatory framework, and that's it. But here, when I have to look at various things, the legal aspects also come here. The legal risk is one of the important risks. Let's say if you're talking about a gaming company, a gambling company, online poker for that matter. So all those things also come into play here. And then it's be as creative as possible. So here you got a lot of freedom.
Right. Okay, amazing. And just one last question, Darshan. Uh, any tips that you would like to give for any young chartered accountant, or let's say an experienced one also, who wants to make a career in valuations?
I'm too young to give tips to such people, my peers. But if I have to tell you, because I've worked in this field, I think more or less it's covered in the entire session. Read, read. Like three important things. Second, uh, if you're starting a career in finance, your fundamentals have to be very strong. If your fundamentals are strong, and I'm not talking about like you should know all the different application of this, you must understand why DCF is what DCF is. So whenever you're pursuing a course, let's say you don't pursue a CFA course, but pursue the material of the course. You don't have to give the exam. But if you have a very strong foundation, because you may be looking at valuations for finance as a starting position, but you never know where those pillars will grow and take you. So have very strong fundamentals. Read a lot, and read not necessarily about finance. Finance is must, but you should always have, like, when you need an analytical mindset, you should read a lot of books, or you should read various topics, because anything can be related to. And this is the personal life advice also, not only specific to finance. And any specific advice? No, I think, like, I have a very strong network. Like, whomever you meet, you should expand your network. Try to, because you never know, opportunities may come from any.
Right. Okay, amazing. I think it was very insightful, Darshan. Thank you so much. I'm very sure that whosoever is listening to the video must have gained lot from this small session. And for the benefit of all, I'll be sharing the link to the Darshan's LinkedIn profile. So in case you have any other queries, feel free to reach out to him. And once again, thank you, Darshan.
My One second, Beer, thank you for conducting such a brilliant session and trying to help so many budding professionals. We are so occupied in our, like, I am so occupied in life that I never get a chance, and I would be lying if I say I'm very occupied. Like, I've never taken out time for such a thing, but this is a phenomenal initiative by you, and I hope this video reaches the people, concerned people, relevant people, and they get takeaways from your. So thank you so much, Beer, for taking this initiative.
Okay, thanks, Darshan. Thank you so much.
And I'll be more than happy to take whatever questions people have. So please feel free to reach out to me on my LinkedIn or any other social media platform.
That's very kind of you, Darshan. Thank you so much.